Ladies and gentlemen of the crypto space, we're live at 11:29 a.m. I believe today is Wednesday, December 9th. I don't even know what day it is. Who knows what day it is? These days blend together. I work at home. I wake up, I open the computer, I work. At end of work, I close the computer. I look both ways, and I'm like, oh shit. And then I just open the computer. Crazy times. Bitcoin 11% dip, no mo, FOMO. Love that hashtag. That's my new favorite hashtag. I've used it a couple times this year, but it's a good one. No mo, FOMO. Sounds like something you get at the Japanese restaurant. But lo and behold, it's good financial advice. Today's episode, along with all episodes, is sponsored by Change Angel, non-custodial swap exchange for social good. If you're depositing on exchanges, you are doing it wrong. Non-custodial or DeFi. Period. Boom. Who's in the stream? Crypto Chicks in the house. Stelios, yeah. DigiLite, let's go, baby. DigiByte, love that DigiByte. Nothing's doing good in the charts. All coins have a lot of pressure on them. We go get the DigiByte chart, but I prefer really not to. That's just something you should have a small position in, and it's highly speculative. It should be 1% of your portfolio, no more. And yeah, from a technological perspective, I'm an engineer. We've talked about it countless times. I built the Android Digibuy wallet, but still max speculative. So don't think otherwise. Don't. So that's really what this stream is about. No more FOMO. Stop buying shit and gambling, boys and girls. You're gambling with your money. Don't do it. Anyway, Crypto Monk, 3 cents. Just kidding. Oh, did you buy in 2035? Who knows? But that's the whole point. There's no way to know. Listen, if Digibyte hits its narrative as uh, uh, data storage and record management, it could be worth a fortune. But if it doesn't, it's not going to be worth a fortune. So stop speculating and stop gambling with your future when we have assets that have been established as part of the global financial macro narrative, such as Bitcoin. Stop gambling. Supplicants await our wisdom. That's right, Rick. Crypto Monk, how are you? No, I'm okay. I got some Chick-fil-A next to me. I'm hungry. I have some work to do today. But this is the time that I like the most, where I get to talk. It's my therapy session for the day, boys and girls. George, do you think we'll have another run this month and a bigger dip mid-January? Let's pop it over to the main screen and take a peek. Well, global financial macro, you really need to follow like Stephen Van Meter. Raul really sets the long-term big picture, the big narrative, but the person, man, who sees what's going on like right now, like play by play. I've never seen anyone do what Steven does. Um, it's crazy, and I really like what's his name, David Coat. What's his name? I'll give you who to follow. He follows the charts, and it's entertaining. He's a perma bear. I appreciate perma bear. Coat? What's his name? Coat. Yeah, here. Derek Coatney. Follow Derek. It's not about being bearish. The whole point is not about being bearish. It's not even about being realistic. It's about the data is shows that the market is like it's like your drunk uncle coming over to a party and just rambling belligerently that everything is incredible. It's like obvious, isn't it? So obvious that this market is just a belligerent drunk uncle. It's like, oh, shut up already. That's what I feel. That's probably the best sentiment I could say about this mega bull run in the market. It's like, for the love of God, just shut up already. It's like your drunk uncle at the party. It's fake. You know the guy's gonna wake up with a hangover tomorrow. There's gonna be intervention one day, and it's like, bull run is annoying. So Stephen Van Meter, Derek for technicals, and Stephen just play by play what's going on with the macro financials. He's genius. And you guys know who else to follow. We talk about it all the time. It's just the name of the game. So do we think there's another run this month and a bigger dip mid-January? Let's look at the Bitcoin chart. So we just had a fat dip to 17,600. A 2,000 point dip, give or take, from the more than 2,000 points from the high. We broke trend formation to the downside. We bounced off the 200 EMA in the 4 hour. We printed a dragonfly doji on the 1 hour. Much more pronounced on the 1 hour, but no doubt visible on the 4 hour as well. Pretty much a dragonfly. Not as pronounced. But what this looks like is a very nice reset of the Stoke on the 4 hour. Stoke is like pressure. We don't have the MACD up, which really shows trend direction. But we know that the trend direction is macro bullish. So I like to think that we don't even need to see the MACD. We know, I mean, we'll also see the slope of the 200 EMA in the 4 hour. This is obviously net bullish overwhelmingly. So Stoke completely reset, coming from oversold, out of oversold, into the field. This looks great. I'm not stating any of these things from a purchase or a sale perspective, but from a sentiment perspective of what just chart looks like, this looks cool. If you're looking at a 1 hour, you got some resetting to do. It'll be nice. What I would like to see, and that contributes to bullish sentiment, if we see horizontal action while this thing resets down to oversold territory. Well, anytime you see horizontal price action or relatively small or less downside price action in the face of a full Stoke reset, if you see something like this, and then it's a full Stoke reset, and then you see a higher high, and you get the overbought, and then it comes back down, and you have a full Stoke reset, that's a bullish cycle. And that's what you want to see. You want to see the higher high as you go into the overbought territory. And you want to see basically not, see here, you want to see not going past the previous high. And then you have that staircasing effect that everyone knows in the markets. Rip to the upside, reset. Rip to the upside, reset. And that's what everyone should keep an eye out for. Now, obviously, here's the deal on this type of chart. This is relatively short term. You really need to look at this thing from the daily. So look at this. It's obviously overextended, but we're in completely oversold territory. And just, I think the macro narrative overwhelms even the daily chart, which is relatively short term. And this is where Plan B comes in with his macro narrative. Look at the RSI and on the monthly, and this is such a relatively new asset that looking at Bitcoin on the monthly, there's such a short history. This is absolutely incredible to look at, really, when you look at it. And you can only imagine, you can't even look at it on the yearly. It's not even possible. It's only 10 years old. But this just looks great. Look at this candle close. I mean, we're primed for really something like this, unfortunately. And this would be so bullish. A dip down to here, 13,947, then a rip. That's just like, it's a cup and handle right there. And that would be so bullish. And that would also be a big fat dip to 13,837. And that'd be so bullish. So the whole point is, you guys looking at like 17,000, 18,000, whatever. These are short-term price targets that have no real big picture perspective applied. A dip to 14,000, even lower, 13,000, 13,600, around this orange line where this was a previous resistance. And if that was resistance flip support, that'd be so bullish, guys. So bullish. All right, what else? What do we got in the stream? Do you think that was the big dip from George? Yeah, that's a little Bitcoin technical and macro observations. Barry, what's up? Cal, all the best from Norway. Always a pleasure, Cal. James is present. Always a pleasure. BTFD. No financial advice. I bought a half of Bitcoin the other week at like 19 and change. I don't really give a crap whether the price goes down or not. What I care about is the fact that I have a Bitcoin and someone else doesn't. That's what I care about. I have something that someone else doesn't, and in the future, someone's going to want my Bitcoin, and they're going to pay up. And if they don't pay up, they're not going to get it. That's the bottom line. That's the way I think. What's up, pellets? Always a pleasure. Theta hanging tough. I don't really know about Theta, my man. Sorry. It's all good, but yeah. Angela, what's up? Did you like, subscribe to Noah so we can get him over 1,000? I'd love to get over 1,000. That'd be really cool. Then we get the super chat at least. We're really close. I think we need just 36 subscribers. So close. Can you explain how Yearn works and what's newly introduced in their V2? So I don't know the full distinction between V1 and V2, but generally speaking, it's DeFi automation. So you have DeFi, where you have a platform that does lending and borrowing, like Aave and Compound and uh, what have you. Point being, and then you have the DeFi automation, which does a capacity to interact with multiple DeFi protocols, and that's what Yearn does here. So we go to Yearn, so then you go to the vault. And compound is more the complex one because it involves a V curve and VE curve and YVE curve, which is the ape tax. But let's say you're talking about the three pool. So it gets 16.8% yield because you have yield derived in curve. Here. So three pool, if you go over to curve, three pool, three pool, three pool. Where is it? Here, three pool gives 25.26 percent yield derived in denominated in CRV, and then you go over to Yearn, and obviously this number, this percent is based on the historical price action of curve, the depreciation of it. It's gone down in value substantially, but your yield in this vault is derived by your liquidity position or the liquidity position of the entire vault generating curve emissions, and the curve emissions are sold to increase three pool tokens. So you deposit, you get your Y 3 CRV, but when you withdraw, you're going to get just 3 CRV. So this is your interest rate on what on 3 CRV assets, no CRV involved. So this is DeFi automation. They automatically sell the CRV to increase the supply of 3 CRV in the vault. Now, I don't participate in that. I don't participate in the compound pool because I don't want compound tokens. What I want is curve tokens, CRV. And I want more of this. This is what I want. This is the money. This is the future money. I want to own as much a position as I can of the daily profits, the admin fee. The admin fee is 0.02% of all transactions on the platform, and I want to own as much of that as possible. And right now, it fluctuates, and uh, uh, it's diluted daily as more and more people are buying VECRV using emitted CRVs, like 2 million CRV emitted daily. So the whole point is my relative proportional ownership of the admin fee is diluted daily, but I'm constantly locking in the ape tax, which gives me 1.48 times on my money. So I'm actually getting a leveraged ownership of the admin fee as compared to locking curve into VE curve directly. So that's why you do that. So what does Yearn do? Yearn automates all of this stuff. And that's what Acro is playing around with too, and a couple of them. That's what all of them try and do. And that's a big deal. This DeFi automation is basically, you know what this DeFi automation is? It's basically like going to Fidelity and having Fidelity craft some sort of strategic portfolio. And they're trying to automate the investment process for you. Whoa. So, but now we've just completely deprecated the entire legacy financial system by coding institutional investment strategies. We've just coded it into a smart contract. And that's what DeFi automation is. It's literally the real-time deprecation of legacy financial investment strategization. Crazy, crazy. That's why Yearn is a massive deal. And from an investment perspective, Yearn is even a more massive deal because there's only 30,000 of them. It has the lowest supply of any asset in the space, and that was chosen. And Andre really created a monster. And it was obviously well thought out and just executed flawlessly. Bottom line, that's the name of the game. You're welcome, George. You're welcome for the insight. I try my best. These are the thoughts that go into my mind and how I understand these markets and how I structure my portfolio and I manage my gains and yield. And my But what I want is my gains to be from yield, not from trading. I have no interest in trading. I don't trade. I historically have never traded, and I'm not historically successful at trading. What I want is I want my principal to be able to generate about 4 or 5% a year. And I want that 4 or 5% a year to be able to provide a sustainable source of revenue and income to either supplement or replace what I get from work. And that's the goal. And that should be everyone's goal, and it should be obvious. If you're trading 8 hours a day for money, wouldn't it be great if you could accumulate enough money that your money makes the same amount of money that you did working 8 hours a day? So all you have to do is calculate how many years it takes, how much money you have to save, and a little bit of luck with some strategic investments, and you'll get to that number. So, folks are either going through their life just not trying, not believing that math works. I don't know. I don't know why more folks don't pursue money making money. I mean, money makes money. So why wouldn't people accumulate more money to make more money? I don't know. Seems kind of simple to me. George asked about Rook. Nothing. There's no updates about Rook. You follow them on Twitter. Rook is exactly what it was. My entry was at 77. I don't give a shit if it goes up or down. I got about 8 grand in this bad boy. This is probably the most. I see this as possibly a speculative bet, or at least the 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 speculative bet that I have a position in that has potentially the largest asymmetric return potential. Um, I mean, listen, Aave, you're talking about years. I have 68 Aave, which is like 5,700 bucks, and it's obviously small, and it went up thousands of percent this year. So I'm not. My position in Aave isn't for it to go. It's already. Here, let's take a look at this. Let me give you guys some perspective. Check this out. Here's Aave at $84 with a market cap of a billion. What's it going to take out Link at 5 billion? What's it going to take out Ethereum at 40 billion? Now, you spin the whole system forward about 5 years, and that's the type of bet you want. If it's at $84 and $1 billion market cap, and let's say some serious shit goes down in 5 years, you got CBDCs going on everywhere, you got banks on the defensive, you got Celsius and BlockFi like companies popping up all over the place in competition, and Aave is literally disrupting the banking system, and it's valued at a $500 billion, 500 billion or 1 trillion, $750 billion, and it goes 750 times on its money. So there's asymmetric return potential, but you're betting on systemic disruption of literally the status quo financial system. Now, there's no reason that that's impossible, which is why having a position is something that I have deemed reasonable after careful thought. Picky, picky, picky to buy, quick to sell. I don't expect this to go up in the short term, and I don't expect it to go to my interested valuation anytime soon. But the bet with Aave is that this shit disrupts banks, and it starts issuing home mortgages in the UK, which it has a license to do. And the yield, and where's it going to get the money for the mortgages? Me and you and people. And who's going to get the interest that the person who takes the mortgage pays? Me, you, the people. And that's why banks suck, because they don't do shit for their investors. They don't do shit for their depositors. They do nothing for their depositors. Banks are disrupted in the process of being disrupted. That's the bottom line. So, Rook, very large asymmetric return potential, high risk, max risk, max risk. Aave max risk relative to my target, and I got a whole bunch of other bets going on. I'm just saying, boys and girls. What did I miss? Crypto Chick says, did he get into Bondly? What is that? Isn't that Barn? You talking about Barnbridge and the bonds? Oh no, maybe you're talking about something else. But these are cool. These bonds, these smart bonds. I read about these briefly. So this is DeFi automation, ladies and gentlemen. Yet again, if you read the documentation, I don't remember. I read it a bit ago. Um, but it's more DeFi automation. Down with the banks, damn right. Abram says, I'm looking at the cashing out side. Are you able to describe taking out your yields and if crypto? Yeah, yeah, you're gonna want to use like token tax and there's a bunch of others. Finance, no. Tax, token tax. Token tax does the trick. Yeah, you're going to have to pay tax. There's a lot of taxes on your yields. Anytime you move money into a registered financial institution, the government's in a great position to know about your financials. And if the government's in a great position to know about your financials, you really need to pay tax on it because then they have reason to audit and reason to go after the amount of money that they know you have achieved capital gains on. There's total gray area if your assets are on self custody addresses, and this is why Minucci Bucci and we've heard some social media commentary and potential news that they want centralized exchanges, registered financial institutions, to have people opt in to disclose their addresses and say officially, this is my address. Because then they have a legally established causal relationship between a person with a registered KYC account and a non custodial account. And unless that causal or declared disclosed relationship is established, it's not official. It's not official. So it gets complicated. And it's a big gray area. So I have no idea what the heck that means. All I know is cover your bases, pay your taxes, and do the right thing. And however folks interpret that is really what's pertinent nowadays because there's no definition. The amount of definition and documentation and details that these government agencies give us is pathetic. I mean, the IRS is pathetic. It's a pathetic institution that it can't even do its job right. It literally doesn't know how much a person owes in taxes, and it literally asks you, "Hey, tell us how much you owe us." That's pretty pathetic. It's a pathetic institution. It's a failed institution. It's antiquated. That's just crazy. Literally, we have to tell the IRS how much we owe them. It's pretty pathetic. Um, no, I don't know Bondley. I'd have to look into it. I'm with you in staking over trading. Yeah. Uh, it's not really staking, it's yield and the DeFi. And where does the yield come from? The yield comes from transaction fees. And I talked about this the other day that yield derived from inflation, like proof of stake, and game theory is a bit of is questionable. So Ethereum is potentially going to be deflationary. Not the proof of stake is going to be inflationary, but if they have a burn component, part of transaction fees, that would apply deflationary pressure. And we know from synthetics and their financial experimentation that incentivize supply disruption, where folks are encouraged to lock SNX supply to mint SUSD. You could have deflationary pressure overcome inflationary pressures, which is absolutely fascinating from a game theory and financial experimentation perspective. But the point is, if you're getting yield from a transaction fee, that's overwhelmingly superior, no matter what, to yield derived from inflation. Even if the inflation is accounted for with a secondary deflationary component, which is basically a big part of the story of what Bancor is heading down. Bancor's big deal. Keep an eye on it from a development standpoint of what they're doing. Everything that I say other than Bitcoin is max speculative, boys and girls. We're talking 1-2% of your portfolio, small bets. We're talking about not protecting your gains. You're investing in anything other than like Bitcoin. You're taking risk, more risk than Bitcoin. Bitcoin is crypto risk off. That's the bottom line, boys and girls. Bottom line, um, there's no such thing as avoiding taxes, Stelios. No such thing. If we had 8 Bitcoin to play around with, we would all search for yield, but most of us don't have even 1 Bitcoin, so we have to trade and speculate. I don't have answers to the I don't have the best answers to smaller portfolios. I mean, bear in mind, like in 2017, 2016, I had a smaller portfolio. I think I had like 10 grand worth of stuff back in 2016. and it was spread around, a little spread too thin. I didn't do so well in my trading and stuff back in 2016, 2017. Um, the appropriate thing to do is what Warren Buffett says. You're not going to make money unless you take a big bet. So, which is a little contrary to what I espouse or what I propose with regard to risk off. So, the only real way to get to a critical mass where yield is meaningful is to take those bets and be risk on. Can't say otherwise. I took a lot of those bets towards the beginning of the year in March. I was risk on substantially, and it paid off heavily. So, Bancorp pools closed? No. So what is closed? Closed or open is depending on the quantity of the balance of the pool. It depends. Each pool has limits because of the way they work with their impermanent loss and their insurance coverage. So the pools only have a max amount of liquidity that can be provided to either particular side. So that changes over time. Keep an eye on the pools. They open up, they close down, depending on how much liquidity is applied to either side. Crypto Chick says, send you a DM about converting my IRA. What are your thoughts on how to maximize staking yield? Oh, yeah, I remember that. I don't know, man. I got IRAs too, and listen, gold and gold miners and silver miners, in the short term they've been beaten up, but if you're talking 5, 10 years, and the whole point of an IRA is you don't touch them until you're 60 something, 70, 67 and change, and I mean, gold's going to seriously outperform the market. I mean, it's like Jim Brickard says, 10, 15, $20,000 an ounce of gold. So, for me, I grab the gold bar for an IRA, like a retirement account. Just if you that risk, so I like risk off. A gold bar, short term, might seem like something that's not going to produce asymmetric returns, but if you look out far enough, and that's what an IRA is really designed for, if you look out far enough, like 10, 15, 20, 30 years, the asymmetric returns for gold are going to be ridiculous. There's going to be some serious gains. 10 grand worth of gold turning into 100 or a million or something like that. Who knows? I don't know. What percent of my portfolio is Ethereum? That's cool. Small percent. I think of Ethereum as cash. In fact, here, this is my deal. This. I showed my wife this the other day. I'm like, here's my spending cash, honey. This is my spending cash for gas fees and stuff, and this is my spending cash right here. So small. I don't really have any real investment in Ethereum. I do have I threw like 32 Ethereum into Celsius just because. And I have 6 Ethereum locked in the Plasm lock drop. So I don't get to touch that for 3 years. So I got 6 Ethereum locked up for 3 years in a smart contract, which is pretty cool. So I got a couple Ethereum there. And I have my spending cash here for gas because man, I got to get my ape tax. Got to get my ape tax, boys and girls. For up to 484, he's up to 484 in the Epoch's claim, which means we're soon going to be able to claim. Well, he's going to have full rewards that we'll be able to claim on. It's so expensive. Look how expensive this is. 51 gas fee. And you want a quick transaction, you're talking $27 to interact with that smart contract. So I need a fair amount of spending cash. How about that? You need spending cash because this stuff is expensive. Stelio, can we continue to accumulate as we can? You do the best you can. That's all you can do. The whole point of everything I talk about is to give you guys knowledge. And it's not choices. I'm giving you guys options. And folks have to take risk. If you take no risk, you will go nowhere. If you take too much risk, the odds are not in your favor. So that's what they say about risk-adjusted returns, and that's what old school financial guys would talk about pricing risk. We could actually apply a price to risk, and Raoul says it very nicely. You cannot apply a price to risk anymore, and that's what he talks about with regard to the death of macro, and what he talks about is absolutely fascinating, way beyond anything. I'm young. He's old and experienced, man. He's incredible, absolutely incredible what these guys talk about. Real vision. Crazy. You took the risk at the beginning of the year, but one point that most people miss is that you did a metric shit ton of homework. At least that's what I see. So I've been doing this since 2016, 2017. I bought Dash I remember Genesis mining. So I was mining Dash back in like 2016, um, and I was getting like 5 or 10 a day, and they were 250 at the time. So Dash was 250. Dash BTC. Bittrex. We need older charts. We need to go out to the weekly. No, zoom out. Yeah, so here, 2015, 2016, I was in probably around here, and then it went to like $1,000. This is crazy. So Dash, I was mining at $253, and then it went to $1,000. That was crazy. So I sold like all the way up, and I didn't make. I really made nothing. I could have had like 2 grand, 3 grand worth of Dash worth a couple $100,000 if I played it right. If I had the experience that I have now. But I didn't play that right. But now I brought that experience over to 2020, and I did the best I've ever done this year, I guess. I hope. I hope I did well, and I hope I continue to do well. No one says just because I did well at the beginning of the year doesn't mean I'm going to do well going forward. But I'm trying to protect. I'm protecting my gains. You got to protect your shit. Stop gambling. Stop gambling. You work too hard to gamble, but you need to take risks. Otherwise, you're not going to get anywhere. So that's important. That's an important lesson because, and it's contradictory. Um, I advocate don't take risks, but you have to take risks. So what does that mean? That means you have to. It's a gut feeling. It's a gut instinct of how much risk to take without putting too much on the table, and then it's excess. Yeah, pellets. You want to see the portfolio? Maybe tomorrow. I can show you guys what I have. I mean, it's really just choices. I don't really feel comfortable showing folks how much I have, but I can show you guys what I have. My choices. And a lot of my choices aren't because I think the portfolio is optimal or perfectly balanced, but it's kind of what I ended up with. And I don't really see a need to trade to adjust the balances and position sizes. I'm kind of found a point of comfortability with the asset allocations that I have currently. So it's not perfect necessarily, even by my opinion, but I feel comfortable with it enough to leave it. So that's a good point. Um, Very good point. Well, I'll get around to that, guys. Putting my IRA into crypto, grow yield. Yeah, but bear in mind if it's the IRA penalty has been waived, so you don't have to pay that 10% penalty. You're going to have to pay tax on if it's a traditional IRA. You're going to have to pay tax, and that's according to your tax bracket for capital gains tax. So you're talking about 10, 15, 20% probably. So bear in mind if it's a traditional IRA and you take money out of it, you're going to have to pay tax on that bad boy. Roth IRA, I don't know the rules. Roth IRA, it's taxed when you put the money in. So I'm pretty sure with the penalties relieved because of COVID, you might be able to take all of your money out of a Roth IRA without any tax, which is interesting. But I like the IRA. It's tax deferred growth, and that's the whole point. And that's a great place for gold, um, especially with a larger institution where you have a greater sense of comfortability trusting them as a custodian. But the yield, man, the yield in the crypto, it doesn't exist in the legacy financial space. You're going to get the yield in REITs and dividend-bearing instruments, but I don't trust them at all. And that's the problem. I've talked about this before. I just have no trust whatsoever in legacy financial yield-bearing instruments. I just don't, man. Yeah, so that's an interesting one, Michael. My 6 Ethereum that I use for the lock job for Plasm. And Plasm, I got a lot of Plasm. It's worth nothing right now because it's a Polkadot substrate parachain. But the whole point is PolkaSwap's coming online, interoperability with Ren, and you can imagine what the market's going to be like in 3 to 5 years. All this DeFi mania, and Polkadot's not even online, and Cosmos isn't even online, and even Cardano can make a splash in 3 to 5 years. You can have a robust market of like crazy cross-chain interoperability. So yeah, it could be cool. Yeah, crypto chick. This Dash was wild. I mean, the narrative has kind of died, and it's a legacy masternode proof of stake type asset, and the narrative for it unfortunately has died, along with a lot of the incredible legacy proof of stake and masternode type assets, StakeNet, BlockNet. The narrative. It's still a great narrative, but it obviously has lost steam with regard to the pricing of the asset itself, which is the same thing you see with like Syscoin. It was $40,000 a masternode, and nowadays you get a masternode for on Syscoin for six uh, 6 grand, and a BlockNet service node is 6 grand. BlockNet was like 150 grand for a masternode back in 2017, something like that. So the narrative has changed, and who knows what's going to be in 3 to 5 years. This could be crazy. So this is the time to really just be comfortable with a portfolio and just let it sit and let it become what it's meant to become, what it's destined to become. Keep an eye on the markets, enjoy our conversations, and and start to really understand about yield and gains and tax obligations and your goal is not to make $5 million, because if your goal is just to make $5 million, you're screwed. You guys, unless you know what you're going to do with your $5 million, you're screwed because you're going to spend it. What you want is 5% on your $5 million, and that way next year you still have $5 million, and then the year after you still have $5 million, and then the year after. You guys see where I'm going with that? Rich people don't spend their money. Rich people spend the money that their money makes. Stop spending your money and spend the money your money makes. And all you got to do is accumulate more money, and then your money makes more money, and only spend the money your money makes. Now, clearly, there's a critical mass in which this becomes possible. And in my opinion, it's probably, it is in the tune of millions. So that's not easy to get to, but it's a fact, and that's just the way it is. If half a mil, 5 mil at 5%, and you're making $250,000 a year, and you never touch it near $5 million. That's the bottom line. Crypto check, self-directed, no taxes. Good point. I don't know all the details about self-directed IRAs, but you make a good point. I should look into that more. But bear in mind, this is not an IRA. Nothing I do, I want for retirement. I want this for now. I got retirement stuff that I worked my ass off for years on Wall Street in New York City. And I have those IRAs, and it's basically just gold and gold miners because I don't trust the markets. I'm just saying. I'm just saying. Small but interesting concepts, and they also won an EU prize. Clarios? I have no idea. No idea. How would you mark profits during at the end of a bull run? Okay, so this we're gonna probably wrap it up, but it's 12:07. But what is profits? What do you denominate your profits in? And that's really, these are very big philosophical questions. And for me, I have such disdain for fiat currencies and what it's done and how it perverts people and how it's abusive of the general public. The general public knows nothing other than dollars. And to me, that's abusive because the mandate of the Federal Reserve is to make those people's dollars worth less next year to the tune of 10 to 12% per year, whether whether it's CPI and they're only measuring 2% inflation, but then you get the Chapwood Index calculating 10 to 12%. The general public, it doesn't matter. They're getting screwed. They're the ones who are getting screwed. That's an abuse. The mandate of the Federal Reserve should be to preserve value and not destroy it. It's their mandate to destroy your money. So I'm angry, and it's frustrating. Should frustrate everyone and make everyone really angry, upset. When you convert into a checkbook IRA, you can buy alternative assets in crypto. Yeah, cool. I'm cool with that. I just don't know all the details, and personally, I don't know. I just don't know. All I know is I have ledgers. All I know is I have ledgers. That's all I know. All I know is that I told my wife about the ape tax, and she looked at me all cross-eyed. That's all I know. You come in with the IRAs and self-custody IRAs, and all I know is about the ape tax. I'm just saying. Thanks. Have a great, productive day. No doubt, Heirloom. Always a pleasure, George. Always a pleasure. Thank you, everyone. 12:09 p.m. on a Wednesday, December 9th. Today was a good one. Smack those thumbs up buttons. Tell everyone to subscribe, and we're going to keep the ball rolling with some good knowledge, good discussions, making good choices, and that's what we do. I wish you all a wonderful day, and I'll see you all tomorrow. Peace.